Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. And once again, it is Rocktober, baby. We call it Rocktober because the month of October, usually these markets rock and roll. And boy, oh boy, are they rocking and rolling lately. I have really interesting charts to show you, which should put a lot of this into perspective, what's going on right now in the stock market. It is pretty simple analysis, but it is straightforward and it is pointing in one direction, and it is not up, not at the moment. Let's see what we're going to get out of that. Traders, due to the insane volatility, and I mean insane volatility, moves nobody could have predicted, at least intraday moves. I'm talking about during the day, you're getting 50, 70 point swings in S&P. Other markets are running limit down, limit up, limit down again. Due to that reason, I am not going to give exact entry levels in my video tonight. And on the site, we don't have exact entry levels for you. We told you on the site that we were looking to buy dips in gold. We're looking to possibly or definitely buy dips in wheat. We're looking for the possibility of a currency rally, maybe just a 1 day, 1.5 day rally in euro currency, Swiss franc, and British pound. We're still doing our homework on that, but the indicators are pointing towards a little pop maybe coming our way, so we'll take a look at that. And we are selling rallies in the indice markets, the S&P, the Dow Jones. We are looking to sell Nasdaqs. We like selling rallies in those markets. But because of this insane volatility, I'll handle it like this. Come on down to the site. Make sure you're in the chat rooms as the market's set up for what we like to call our sweet spot. I'll let you know. I'll shoot you a quick flash update and you get in at that level, and then I'll issue a stop to you. I think it's safer. I think it's prudent to give it to you in this fashion. There are many omniacs who are following me, and in these whipsaw markets, I prefer that we all do this at the same time, and I don't put the trades out there and leave you up to your own judgments. So stick with us, traders. Come on down to the site. It's www.livewithoscar.com. Jump into the chat rooms. We will certainly let you know when the sweet spot's set up in the gold, in the currencies, in the S&P, and in the wheat. The wheat trade, I can tell you now, is getting very close to hitting our entry level. So go take a look at your charts and see if you like buying wheat today. Tell me what you think about that. All right, traders, back to the charts. This video is for October 8th, Wednesday, 2008. And one of the things that have made us realize way back at the third quarter of 2007, when we started doing videos for you about the top of the stock market, was that on the daily charts, we got below the Omni's proprietary moving average. There was also a huge head and shoulders and many other indicators, but the indicator that kicked off our go from bull to bear in third quarter last year was getting below on the daily charts the Omni proprietary moving average. The Dow Jones got below on the daily, the Nasdaq got below, the S&P got below, the Mini Russell got below, and I started showing that to you traders. Then we started to get below the weekly, on the weekly bar charts, we started to get below the Omni proprietary, and I started showing you more videos and saying, boy, oh boy, this is getting serious. That was into the beginning of this year. Then the monthlies. Now the monthlies are below the Omni's proprietary moving average. You almost never see the monthlies get below this thing. The dailies started off to drop. The monthly chart, the weekly charts told us that we were going to continue further, and now we are below, in the monthly charts, below the Omni's proprietary moving average, plus many other indicators, traders. That is big, and that's what I'm about to show you right now. So let's go look at some charts together. Okay, traders, you are looking at a December daily bar chart of the S&P December daily bar. Back in November of last year, we started settling a lot below the Omni proprietary moving average. That prompted us to start doing videos to tell you that it looked to me between the head and shoulders off to the left, you can't see right now, and then dropping below the Omni proprietary, we would start to have a breakdown. That breakdown happened, but look at how far down we've come since we got below the Omni proprietary on the daily. Now let's go look at the weekly and then the monthly for each one of these indice charts, because I think you will find it quite interesting. Okay, traders, you seen back here on that last chart, on the daily chart, it was around November that we got below the Omni proprietary moving average on the daily charts. Now you are looking at the S&P on a weekly chart. On May 23rd, 2008, this May that just passed, we got below the Omni proprietary moving average. We actually got below earlier than that, but it went back and tested it on May 23rd and had a severe break since then. Look at how low we are. Look at how high we were when we tested that average. Traders, you've seen the daily. It started the down move. Now you see on the weekly, we're below the Omni proprietary moving average. Check the next chart out. Now the monthlies are starting to breach this average. Okay, traders, the very same chart, except for now we have expanded out to a monthly view. The monthly, you can clearly see we had an animal double top to sell. We talked about that when it got there in our videos. That double top has been holding ever since. But look at what has happened on September 8th, or I should say during the month of September. We got below the Omni's proprietary moving average on the monthly bar charts. And look at the size break we've witnessed since then. We are lower now. If I showed you where the chart was now, we're even lower than we are right now on this daily bar you're looking at, or I should say monthly bar. But look at that, traders. You saw the daily break the Omni proprietary, and the big break started. The weekly tested it and started to break, and now the monthly is below. That's on the S&P. Let's go look at a couple of more indices to see that it is happening in all of the indice markets that we follow. Okay, traders, we are now looking at the Nasdaq daily bar chart. 1 month, almost 1 month to the day later, in Nasdaq, it got below in December of 2007. It got below the Omni's proprietary moving average, and the break started to happen. Now look at how far down this market has gone since on the daily bars. Let's go look at the weekly bar and see what happens. Okay, traders, on August 22nd, about 2.5 months after, on the S&P chart, on the weekly, we got below the Omni proprietary. 2.5 months later, August 22nd, in the Nasdaq, on the weekly, we broke the Omni proprietary moving average again, and look at the size of this drop all the way down to here. Look at this. Break, break, break. Takes out major support, breaks big, and then breaks again, traders. This is serious. You've seen it on dailies, now weeklies. Now let's go look at the Nasdaq monthly. Okay, traders, on the Nasdaq December monthly bar chart, we are now below the Omni proprietary, and it is broken pretty seriously. It's all the way down to here. Look at the size of that drop. Might look small to you, but this is a monthly chart. Each one of these green bars represents a whole month's worth of trading. If the dailies, weeklies, and then monthlies all get below the Omni proprietary moving average, which is a rare occasion, you have steam building up in this bear market, traders. You've seen the Nasdaq and you've seen the S&P charts. Let's go look now at the Dow cash charts and see if they're following in suit. Okay, traders, about 5 days after the S&P broke the Omni proprietary moving average back in 2007, the last quarter of last year, about 5 days later, so did the Dow Jones Industrial Average. It got below the Omni proprietary, and look at the size break you've had in this market since then. A monster drop. All began with getting below the Omni proprietary moving average on the daily, right? Let's go look at the weekly and then the monthly of the Dow Jones. Okay, traders, you are looking at the weekly Dow Jones cash chart. The Omni proprietary moving average, as you can see, it holds really, really well above this average usually. It gets below, has a test on May 23rd, which fails exactly the same test and the same day that it failed on the weekly in the S&P. It fails to hold, gets back below the Omni proprietary, and look at the size of the drop that we've witnessed since then. Dailies, weeklies, and now monthlies, traders. Let's go look at the monthly Dow Jones chart and see what that looks like. Okay, traders, you're looking at the Dow Jones Industrial Average Cash monthly bar chart now. And as you can see, it is a rare occasion that we get below the Omni proprietary on a monthly. Last time was the big crack between 2001 and 2002. Now, the market was way higher, and so was the average when we took it out this month in September. On the monthly, the Dow Jones is below the average and all the way down here, traders. If you take a look at the Dow Jones Transportation Average, our leader, the average looks like this, and the market is right there just kissing it as of today. If that gets below, it makes even more of a case for a lot longer sustained bear move than we were hoping for. Traders, dailies, weeklies, and now monthlies, this is the exact same action I showed you on those currency charts in our last video. The dailies and then the weeklies, and now they're getting towards the monthlies themselves. But this one is about the indices. This one is about to show you, this video is to show you that, boy, oh boy, it looks like there's more room on the downside for us in the indice markets. Do not fall in love with the upside, traders. Okay, traders, so you see those charts? When I say don't fall in love with the upside, I am saying don't fall in love with the upside. If this market rallies, you let it rally like it did on Tuesday. It rallied into the 1070s, and then it broke all the way down below 10 even and got to 997. You need to sell the rallies in the indices. Now, there's been lots of talk about possible interest rate cuts and then no interest rate cut out of Europe. You're hearing our Fed saying they will be quite accommodatable to us. They will accommodate the lower interest rates if they need to. However, like I said in last night's video or 2 nights ago, the dollar doesn't have much more room to lower interest rates, or I should say the U.S. doesn't have much more room to lower interest rates here, whereas Europe and a lot of other foreign countries have a lot of room. Their interest rates are a lot higher, and they have a lot more to lower. So even if there was a concerted effort to lower interest rates in order to try to boost up this market, the dollar will still gain strength over the other currencies, knowing that their interest rate cuts will be deeper and longer. So if you're thinking about currencies, keep that in mind. However, because there were some announcements out of Europe that there were to be no cut at this moment in time in interest rates, the technicals on the currencies are looking a little bit bullish. I am not falling in love with the upside in currencies, nor am I getting bullish, but we are day traders, and if the indicators turn in currencies, we have to turn with them. Now, maybe you'll want to handle this by letting it rally a day or two and selling into it, or maybe you'll try to buy the pop. I think it's probably safer to sell the rallies, but let's see what sets up. If a really good buy sets up, we'll be nimble. We'll try to get in and get right back out. That takes care of the currencies. For the indice markets, traders, watch out below. You've seen those charts. They speak for themselves. You've seen what happened to other markets that get below the Omni proprietary, and then you've seen it break on the dailies, then the weeklies, then the monthlies in the indice markets. And I have been showing that to you in video after video for months on end, traders. You have come to a trading academy where we have been able to give you the right direction, especially long term, since this move started, literally, since the third quarter of 2007, we have been telling everybody, watch out for the downside in this market. And here it comes, traders. We are www.livewithoscar.com, and we are here to help you learn how to do analysis like that. So make sure you come on down and learn from us. We are a trading academy. We do so much for free to help you traders. We set up classes. Then we set up an Omni slot machine so that you can earn free dollars. If you earn Omni dollars, you can pay for your gold classes with Omni dollars, so they're free, traders. We're here to help you for free. If you go into our forums and you write in the forums, you write a post, you answer a question, you receive 2 Omni bucks. As you accumulate Omni bucks, you trade those in for classes. They are free. We're here to help you. So please come on down to the site. Ask us about posting in the forums. Ask us about our Omni slots. Ask us how we invite you into those classes, and we will do that for you. All right, traders, give me a call anytime, day or night, 702-629-4755. Continue, please, as always, to shoot out your emails. Send me your homework. Send me charts with trend lines, whatever indicators you use, and a little blurb what you think it means. I will reply to that homework. Shoot those emails out to Oscar at futuresanalysts.com. All right, traders, when I say never trade alone, I know all you omniacs at my site understand what that means. We have been really helping one another in these chat rooms. You traders from around the world, hey, traders from around the world, thank you so much for showing up every day. Thank you for helping one another and being so kind and courteous. We really appreciate your patronage, the way you come around every day, and how hard you all study. So, wow, kudos to you traders. All right, Twitter, right, Mikey? There seems to be a huge amount of fans on Twitter lately. They have been following us, and it's twitter.com. I will continue to try to post there. I will put my videos there. A shout out to you Twitter fans. Thank you so much for coming on by. Okay, traders, that's about all I'm going to do because I got a lot of work ahead of me. Again, we're looking at the possible rally in gold, possible rally in wheat, and maybe even a rally for a few hours to a day and a half in the currencies, while we're selling rallies in the indice markets. All right, traders, I know it's tough out there, but keep your emotions out of trading. Put your stops in first, especially now. Now more than ever, put your stops in first. The way this market's whipping around, if you buy something and you forget to put your stop in, the moment you hit that buy button, the S&P could be down 50 bucks in your face. Put your stops in first. And then if you buy something and it starts to break, at least your stop gets hit. All right, traders, remember that a stop is your best friend. All right, traders, say this to yourselves every morning, every afternoon, every evening. It'll help you keep your emotions out of trading. And you know what that is. Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.